Well, in Fin Street today, the focus is on PSU banks, which have been in the focus of the market over the last couple of quarters. While there is improvement in asset quality and profitability, which are the key positive developments, what has gone largely unnoticed is their big loss in market share. Let's first take a look at what's worked for PSU banks. Asset quality has been improving for the PSU banks over the last few years. In last 13 quarters, gross NPA ratio has declined by 761 basis points for Union Bank of India, 638 basis points for PNB, 588 basis point for Bank of Baroda, 369 basis point for Canara Bank, 268 basis point for SBI. The decline in stress has meant a declining credit cost too. Over the last 13 quarters, quarterly credit cost on an annualized basis has declined the most for SBI by about 126 basis point, 119 basis point decline for Bank of Baroda, 109 basis point decline for Canara Bank, 73 basis point decline for PNB, and about 54 basis point for Union Bank of India. The decline in stress always aids the top line. So net interest margin has improved over the last 13 quarters by about 76 basis point for Bank of Baroda, 58 basis point for Punjab and National Bank, 35 basis point for Union Bank of India, 32 basis point for SBI, and about 21 basis point for Canara Bank. Now, quarterly return ratios, thanks to better earnings profile of PSU banks with respect to improving their net interest margin and decline in stress and credit cost, has improved substantially. Best quarterly ROA improvement has been for Bank of Baroda by 141 basis point, followed by Union Bank of India by about 88 basis point, 83 basis point improvement for Canara Bank, 80 basis point for SBI, and 25 basis point for PNB. Banks have also lightened their balance sheet. So they have removed the riskier portfolio and focused on lowering the risk in the balance sheet. RWA, that is risk weight asset to advances ratio, has improved the most for Union Bank of India, followed by Canara Bank, PNB, Bank of Baroda, and SBI. Now, Canara Bank has the lowest RWA to loans amongst peers at about 67.2% for Q1 FY24, the highest being of SBI at around 85%. But while PSU banks have taken care of the stress in the portfolio, they have lost on market share. Private banks have been stepping up branch expansion despite digitization, which has led to more footfalls and accounts being opened with them. So if you take a look, SBI has lost the most with respect to market share in deposits by about 101 basis point, followed by PNB at 98 basis point, Union Bank of India by 55 basis point, Bank of Baroda by 48 basis point, and Canara Bank by 34 basis point. Even on the low side, the large PSU banks have lost market share. PNB has lost the most market share by 85 basis point in last 13 quarters, followed by Union Bank of India, a decline of 66 basis point, SBI by 33 basis point, Bank of Baroda by 30 basis point, and Canara Bank only 18 basis point. So in terms of conclusion, PSU banks are set for a good FY24 and even FY25 as well, with respect to earnings momentum remaining healthy for them. Net interest margin will be a hindrance in the near term as cost of funds may weigh in on the performance. With balance sheet being the lightest in a decade or more, credit cost is expected to remain under control and aiding the return ratios, which is expected to either improve or remain healthy as per PSU bank standard. Now, NCLT resolutions and other stress resolutions can work wonders for these lenders. While cleaning up of balance sheet has happened, it would be tough for these PSU banks to gain back the market share that they have lost.